Hello friends. So today we'll discuss the fourth chapter of economic survey, that is monetary management and financial intermediation, a good year. So in this chapter, economic survey discussed about the monetary management, how Reserve Bank of India able to manage the money supply, that too in the context of global uncertainty and also high level of inflation that all the countries are facing, and also the financial intermediation, whether it can be banks, whether it can be non-banking financial companies, or it can be related to some of the other financial sector like primary secondary market and even the pension sector and insurance sector. So these aspects are mentioned in this chapter. So whenever we are talking about the monetary management, obviously the monetary management is very important to regulate the inflation in an economy. And we are all aware, like in the last year at the global level, majority of the developed and developing countries have experienced a high level of inflation. And when there is a high level of inflation, certainly you have to go for a tight monetary policy. And some of the developed countries and even developing countries, they have started tightening their monetary policy. But tightening of monetary policy is not that easy. It will have its own negative consequences. It has its own negative impacts, because if you tighten the monetary policy, certainly it has its own effect on growth. The interest rates in the economy will increase. That will be difficult for the investors to invest money in the economy. So in that particular context, we are discussing about the monetary management of Indian economy in the last 1 year. So this chapter will review India's monetary developments and the performance of the financial system in the current financial year. Okay. So some of the steps taken by the Reserve Bank of India. In its April 2022 meeting, the committee introduced the standing deposit facility, which allowed for the deposits of excess funds by the banks with the RBI without the necessity of collateral in the form of government securities. See, normally during the monetary policy, there are various instruments in the hands of Reserve Bank of India. Let it be CRR, SLR, repo, reverse repo, marginal standing facility, like that. But Reserve Bank of India introduced a new facility called SDF, standing deposit facility. What does it mean? It is something like a reverse repo. That means in reverse repo, normally the Reserve Bank of India takes some loan from the bank. When Reserve Bank of India taking money from the bank, means Reserve Bank of India is absorbing the liquidity from the market. But when they are absorbing the liquidity from the market, they have to keep some securities with the bank, because they are taking the loan from the bank. So now you know that there is an excess liquidity in the market. You want to extract that liquidity. To extract that liquidity, Reserve Bank of India must have a security, otherwise it cannot do under the earlier instruments. You can go for tightening the CRR and SLR. See, tightening of CRR and SLR, again it has its own consequences. So what Reserve Bank of India has thought is, I need to take away the money from the economy without collateral. Is there any such an instrument? Yes, Reserve Bank of India come up with a new instrument called SDF. Under this mechanism, I will take the loan from the bank but without any collateral. Without any collateral. So that is what SDF, standing deposit facility. Anyway, banks will have a confidence on central bank. That is one thing. Second one is, that is a one measure. So even without collateral also, Reserve Bank of India started a new instrument to extract the liquidity from the market. That means Reserve Bank of India ready to do it. Second one, the SDF introduced at a rate of 3.75% replaced the reverse repo rate as the new floor of the liquidity adjustment corridor, facility corridor. So LAF corridor. So what is this LAF corridor? You know about the liquid adjustment facility. Under liquid adjustment facility, you will use the repo and reverse repo operation to adjust the money supply in the economy. For that, there is a corridor. That means you will have a range between you have to operate. A maximum possible range that you can operate, that you call it as LAF corridor. In this, the corridor highest level is marginal standing facility. You are all aware this is the highest interest rate. And the lower one is a fixed repo rate. So this is a corridor. Now what we have done is, in this, the lower base we have increased and we have replaced it with the standing deposit facility. Because of that, what happened? Your range has narrowed down. That means just assume if it is 4, just assume if it is 3, just assume if it is 2.5. Earlier your range is between 2.5 to 4, but now your range has reduced from 3 to 4. That means the interest rates in the economy may increase. That increased interest rate will certainly help Reserve Bank of India to extract the money. Because the window in which you operate, has reduced. So that will certainly incentivize, to keep more money with the Reserve Bank of India. Okay, so this window got cancelled. Next, the MPC also indicated a change in stance from accommodative to accommodative and focused on withdrawal of accommodation while supporting the growth. So that means earlier they used to have only accommodative, but they say like accommodative and accommodation while supporting withdrawal of accommodation. That means we are here to promote the growth, but in an extraordinary case, if we require any extraction of money, we are ready to do it. That means Reserve Bank of India is ready to tighten the monetary policy, and these are the changes that they have brought in accordance with that policy. Because that is required in the high inflationary condition, and we have seen India has experienced a high inflation after Russia-Ukraine war from February 2022. Okay. Anyway, this graph you understood. Okay. When it comes to the reserve money, narrow money, broad money, they have given some growth rate. It's not an absolute number, but it is a growth rate. Broad money, here broad money has reduced from 2021. That means people are not saving much money. Anyway, circulation of money is almost constant, and sometimes it is increased, but anyhow savings with the bank has reduced. That is why broad money has reduced. Narrow money, broad money. And if you are looking into the aggregate deposits, both demand deposits and time deposits, there is no particular pattern to draw. Sometimes demand deposits are more, sometimes time deposits are more. It's all depending on the condition. Okay, context. Next, yes, broad money, aggregate deposits, currency with the public, the same thing. But anyhow, the currency with the public has reduced. The aggregate deposits, I think it is 9.5. Okay, we are almost, okay, it is something, okay, almost constant. That means declining year on year growth. If you looking into that up to December 22, so the reason for declining of M3, is mostly because of this currency with the public. Here I said, here actually the demand deposits and time deposits, here if you take total 28, but here it is something like 9, 6, 15. But here the graph has not drawn in the year 23. Okay, up to December 22 they have given, they haven't given for further months. But when you compare it with the April 21, it is something high. That means demand and time deposits, this is only a growth rate. This is not an absolute number. This is only a growth rate. But when it comes to the this is come to the percentage. The percentage is reduced. And when it comes to the currency with the public, the growth percentage is reduced. When it comes to the aggregate deposits, it's almost constant. When it comes to the M3, it has reduced little bit. And this is important, money multiplier. So this money multiplier, again it has reduced to some extent because M3 reduced. If M3 has reduced to little extent, to that extent money multiplier reduces because money multiplier is M3 by M0. And if adjusted for the reverse repo, under the reverse repo, the Reserve Bank of India extract money. If the Reserve Bank of India extract money, then M0 will increase because reserve money with the government, with the Reserve Bank of India increases. If it increases, money multiplier reduces. To that extent, it has reduced. Okay. And here it is reduced to very high because I think here reverse repo operations are little bit strong. That is why there is a further reduction. Next, if you see the interest rate from April 2022, it has increased. All the interest rates. Prior to that, it was a low interest regime in India. GSEC yields, even if you see, the yields are increasing. Yields are increasing because from April onwards, the interest rate started increasing in the country. If the interest rate started increasing in the country, definitely that will have its own impact on yields of a securities. So that followed. But otherwise, this whole region is a low interest regime. Low interest regime, because in the economy itself, Reserve Bank of India has followed a loose monetary policy. As a result, we are having less interest rates. So just have an idea, category wise, share percentage of total outright trading activities in GSEC. So who are involved in more GSEC activities, who are purchasing and who are selling. This is 2021, this is 2022, July, September 2022. If you see, normally it is a more private sector banks, they are good at doing it, not public sector banks. Anyway, public sector banks are also there, foreign banks are also there, but when it comes to the category wise, the total outright trading activities of the GSECs who are taking, so that is the highest number. Just remember this. Okay. Okay, improvement in asset quality and strengthening of balance sheets. Yes, when it comes to this gross non-performing assets, in public sector banks it has reduced, in private sector bank it has reduced, foreign banks there is a little aberration, but in scheduled commercial banks it has reduced. When it comes to the provisioning coverage ratio, private sector banks are doing better. Okay, because year to year they are consistently increasing. In scheduled commercial banks altogether it is a constant for last 2 years. And these things, whether it is provisioning or whether it is reduction in the gross non-performing asset, because of the strengthening of regulatory and supervisory framework, like implementation of the 4R approach. That 4R means first recognize the bad loan, resolve the bad loan, recapitalize the bank and reform the whole structure to not to happen again. So to clean and strengthen the balance sheet of the banking system. So because of these reforms, we have achieved this. This is what economic survey is saying. Broad-based improvement in the gross non-performing asset ratio. Okay. So sector-wise, if you see, the gross non-performing assets are still high in the industry sector, and after that it is in services sector, after that in agriculture sector. But if you see the level of reduction, there is a considerable improvement in the industrial sector. It is because of some resolution processes that we have started, but still industrial sector is contributing more to the GNPA ratio. So lower GNPA ratio combined with high provisions accumulated in recent years have contributed to the decline in net non-performing asset. So net non-performing asset means gross non-performing asset minus some provisioning. Okay. So this is what, so when on the one hand your gross non-performing assets is reducing. Okay, anyway, gross non-performing asset means non-performing asset plus restructured asset plus written off assets. But anyhow, your gross non-performing asset is reducing and provisioning is increasing. So when both happen, this minus this, no, anyway the resultant will reduce. Okay, so that is net non-performing asset. And there was a broad-based improvement in the gross non-performing asset in the industrial sector. We have seen it has considerably reduced because of industrial sector started performing well, and we are resolving it as soon as possible. Capital adequacy ratio well above the requirement norms. Something I think capital conservation buffer and the capital to risk weighted asset ratio, normally it is at 11.5, but they are maintaining it above normal level. That means our banks are performing well. our banks are performing well. Consistent improvement in the performance indicators, this is important. Return on equity, return on assets. That means 1 rupee of equity in bank or 1 rupee worth of asset in the bank, how much return that they are giving. How much return intern that they are giving. See, if you see the public sector banks, definitely there is an improvement from 2021 to September 2022, March 2021 to September 2022, there is an improvement. That means every rupee that we are keeping it in the public sector bank, either in the form of equity or in the form of asset, it is giving high yield. That yield is from 4 to let it be 10%. But if you see the private sector banks, every rupee of equity or every rupee of asset is giving much more higher yield than the public sector bank, than the foreign bank, than the scheduled commercial bank. Why actually they have given? This is something related to return on equity and this is return on asset. In both the cases, it is performing better. Why? And anyway, this asset is not giving that much growth, but equity is giving much. Why actually we are discussing this? Because lot of people who are supporting the privatization of the bank, normally they will quote this data. Because you are recapitalizing the bank with public money, ultimately what return that the bank is giving to you? No, there is no much profit in the public sector bank. Simply you are wasting the public money. See the private sector banks, how they are operating. What is their return on equity? What is their return on asset? What is their net profit? What is their net gross non-performing assets? So they are performing good. They are performing good. Okay, anyway, public sector bank has its own social obligation, has their own objectives and all. But anyhow, when you purely analyze in the economic perspective, definitely their return on equity and their return on assets in private sector banks is very high. Next, non-food bank credit growth doubled since April 2022. So that means non-food sector, for non-food sector the credit growth has doubled. That means economy is in good position. So again this is related to the NBFCs, increasing credit disbursement and by NBFCs, aggregate credit by NBFCs, credit to NBFC as a percentage of GDP. See, if you take banks are important, NBFCs are also equally important because they are also meeting the credit needs of the important sectors of the economy. That is why if you study simply the credit disbursement of banks, it will not give you the full picture. You must also looking into NBFCs, because NBFCs are also playing an important role. See the level of aggregate credit by NBFCs, you see it is consistently increasing. It is consistently increasing. Okay, and if you see as a percentage of GDP, yes, there is an increase, but anyway it has its own base impact. Now it got stabilized. Okay, so this is something related to NBFC. And declining gross non-performing asset ratio and improvement in asset quality of NBFCs. Yes, NBFCs asset quality is also important because NBFCs are also performing some credit disbursement function. Their health is also important and the non-performing assets of that is also important. And here if you see the declining gross non-performing assets, you can see from 2021 to 2022 in agriculture, in industry, in services you can see the much progress. And if you see the decline gross non-performing asset ratio, the industry percentage again 46, services is 27, personal loans is 23. I think much of the agricultural loans is not from the NBFCs because they are getting some institutional credits or otherwise they are taking from the money lenders, and here their contribution is something like this. So in both banking and non-banking, industrial sector is having much contribution to the non-performing asset. NBFC's performance recouping return on asset with robust capital position. Okay, you can see the capital to risk weighted assets ratio. So we are at comfortable position. It's good. Okay, from March 21 to it is an improvement, but here there is an improvement, again reduction. And if you take the case of return on asset, it is good. That means stagnation here, but little bit improvement from 21 March and September. Now, robust growth in credit disbursement by NBFCs across the sector with a significant moderation. See, highest amount of credit that NBFCs are given to the industry. Okay, in the year 22 it has reduced, but by the time of September it increased, but otherwise 37.5%. But if you take the case of highest increase in agriculture, but highest share is industry, after that personal. This is important. NBFC is giving highest loan to the industry, after that personal loan, after that others, after that services, after that agriculture. But whereas in case of growth from 21 to 22, in agriculture growth it was high, after that it is in services. But whereas in case of the overall contribution, industry is high, and after that personal loans. This is about NBFCs, remember this. Progress made under insolvency and bankruptcy code. So, economic survey last year and this year they have given some progress related to the insolvency and bankruptcy code. So, this performance of the insolvency and bankruptcy code is very important, because when we brought insolvency and bankruptcy code in the year 2016, we have brought with a good intention, like we need to settle the balance sheet problem of both financial institutions and as well as the corporate non-financial entities, that is corporate companies. In earlier case, whether in case of Lok Adalat or whether it is the case with debt recovery tribunals or with the SARFAESI Act, in majority of the cases are languishing under the court. Ultimately, that led to the liquidation, and that too we are not getting enough value. We are unable to realize the enough value. So, that is why to promote the business, to resolve the problem and to make sure that that company should survive, we have brought this insolvency and bankruptcy code. And in this, on the one hand, in the process itself we are simplifying and we wanted to resolve as soon as possible, so that we can realize the high value. But on the other hand, this insolvency and bankruptcy code has brought a behavioral change. What is that behavioral change? Even before entering into that NCLT, people want to resolve their dispute on their own, so that creditors and debtors, they are coming together and they are come to a conclusion, and so that they are bringing a via media solution that brings a win-win situation. So, that is what this IPC has brought. This is what IBC has brought. This IBC has brought not only a resolution process, but it is also brought a behavioral change that helps both the creditors and debtors. And sometimes the companies survive. Even if companies are not survived, the creditor is able to get more amount of money, and the debtor is relieved out of all this process. Otherwise, earlier it used to take lot of time, and the exiting of a business become very difficult. Actually, exiting a business has a very tedious task in India. So, we wanted to change that. And for that we have brought. And if you see, here they have given some statistics. Here also I will say, see, total 5,893 CRPs were commenced. In that 3,946 were closed, 1,946 are ongoing. In that 846 by appeal are reviewed or settled, 740 withdrawals, 1870 liquidation, and 550 through resolution plans. So, this is the statistics, just have an idea. Now, in this again, when it comes to the resolution, the number of cases, majority of them are from industry, remaining less is from services and others. So, this is a behavioral change. If you see the behavioral change of the total, 23,417 cases whose valuation default worth of who has taken the loan worth of 7.3 lakh crore. Total 23,417 applications whose default, that means who has taken a loan worth of 7.3 lakh crore have settled their dispute before it is admitted into the corporate insolvency resolution process. They are not interested to go to the NCLT, they are ready. Earlier this was not the case. Earlier people are so interested to settle the dispute in the banks, and that is how it used to take years and years, because you don't have another alternative. But now they want to settle outside. They don't want to enter into this legal process. That's a good move. Out of 7.3 lakh crore, how much they have recovered is a different story. When creditor and debtor both are accepted, then there is no problem for us. But anyhow, we don't know how much they have recovered, but 7.3 lakh crore worth of default having consisted by 23,417 companies have resolved their issue before entering into this insolvency process. Okay. 60, okay, anyway these numbers I have shown it in the graph box so that you can understand. See here, number of companies resolved 553, go for liquidation 1807. The aggregate claims, that means how much worth of loan that they have taken is 7.9 lakh crore, here 8.28. Suppose just assume in both the cases if they go for liquidation, that means if they go for scrap selling, then they may realize 1,37,000, 60,000 because machinery and all other equipment have its own inherent value. If you go for liquidation, you will get 1.37 lakh crore here, 60,000 crore here. Assets available as a percentage of aggregate claim is 17% and 7.3%. That means you have taken a loan of 100 rupees, the existing assets worth is 17. You have taken a loan worth of 100 rupees, but the existing assets worth is 17. If you go for liquidation, you will get 7 rupees. If you go for liquidation, you will get 17 rupees. That is the worth of the machinery and all that you have. But here what we did, we went for a resolution. If you go for a resolution, then what will happen? Someone will come and someone will rescue that company and someone will run that company. So definitely, if someone coming to rescue that company will pay higher than the liquidation value. How much they paid? This is the number. When it comes to the percentage, this is the percentage. Now here there is no such process, so it's not available. Simply we go for liquidation. That means in 1807 cases, we went for the liquidation, we have able to recover only 7.3%. So you have given a loan worth of 8,28,000, but you got only 60,000. That means you got only 7.3%. That is not good, but that's what happened. Whereas when it comes to the companies that went for the liquidation, have the total aggregate claims, that means 7,90,000 crores of default that we have, or that much loan that you have taken, in that you are able to pay only 2,43,452 crore. That means 30.8% you did. That means you have taken a loan worth of 100 rupees, but you paid only 30. If there is no resolution process, you may get, the bank may get only 17. That resolution process has added extra 13%, that is why 17 has become 30. So with the resolution, you are able to get only 30. And the remaining all went for the liquidation. So actually the purpose of IBC is to save the company and to recover more amount of money from the company, so that the banks can get saved, so that the company can run whether in the hands of the same management or in the other management. That is all decided in the resolution process. But if you observe this, majority of the cases not went for the resolution, but they went for insolvency. The purpose itself is defeated. The purpose is, you can say like, okay, at least 553 companies have went for resolution. No? Okay, that is the optimism that you can have. But if you see the whole data, that is the whole data, majority of the companies went for the liquidation. That is not your purpose. That is not the purpose of this process. So that is the one critique that we can have. Second one is, if you see the percentage of aggregate realization, okay, wherever you go for liquidation, the realization is only 7.3%, but at least wherever they went for the resolution, the average realization is only 30.8%, that is low. At least you should get 50%. But anyway, government can say like, okay, when you looking into the other previous processes like debt recovery tribunal, SARFA AC, it is much more lower. Yes, it is much more lower, I do agree. But when you start a process, at least it must give much more yield, no? Otherwise, simply if you go for liquidation, you are getting 17. With the resolution, you are able to add only 13%. That is not sufficient. It should be more. You should realize more. Third one. Actually, when we started the resolution process, in the rules we clearly mentioned like it must be settled in 180 days with an extension of another 60 days, like that we said 330. But when the case went for an appeal, this time will not be considered. So the appeal time will be excluded from the normal resolution process. As a result of appeal, we are able to solve it in 561 days. We are able to solve it in 437 days. This is very long time. Had you resolved it in 30 days or 40 days, have you resolved it in 30 or 40 days, probably this 7 could have been 17, this 30 could have been at least 40 or 45. So that means the time taking is very high. If the time taking is very high, definitely the value will come down. Value of that assets will come down. So the thing is, most of them are going for liquidation. In whatever the resolution that we are doing, the realization is low, the time taking is very high. These are the problems with the insolvency and bankruptcy code. That is why economic survey clearly mentioned, since significant value destruction may have already happened in these assets, a comparison of realized value with admitted claims may not be a reasonable indicator of the effectiveness of the resolution process. So here what they are saying is, though we have this problem, since the significant destruction may have already happened in these assets. So that means to these assets already a significant destruction of the value happened. That means the value that you are looking today is not the exact value that the asset originally have. Then what happened? A comparison of realized value with admitted claims may not be a reasonable indicator. So what they are saying is, so the asset which you are going to realize, the asset which you are going to resolve is already lost its value. So you have to compare with the reduced value of the asset with the realized value instead of comparing it with the aggregate claim. Okay, when you have sanctioned the loan worth of 7,90,000 crore, probably the asset worth might have been maybe 6 lakh or 5 lakh, but that value has now reduced. Now you compare with the reduced value with the realized value instead of comparing with the aggregate claim. This is not a good indicator. That is what survey is conveying, but still these are the problems. Okay, so the comparison of realized value with admitted claims may not be a reasonable indicator of the effectiveness of the resolution process, but ultimately you have to compare it with that, because you have given the loan worth of 7,90,000. Why that value has reduced? Here you have written significant value destruction may have already happened in this asset. Why that significant destruction of the assets or the assets value has happened? Because you have delayed it for 561 days. You could have immediately start. Ultimately for the bank, this is the parameter. We have given 7,90,000 loan, we are able to recover only 2,43,000. Okay, and just see, they have given comparison with other measures, Lok Adalat, DRT, SARFA-IC and IBC. Okay, when you compare it with the others, okay, 21-22, the IBC is highest. Anyway, here it is not the IBC, SARFA-IC is highest, but here IBC is highest, here IBC is highest. That means in the last 3-4 years, though with all these limitations, IBC is able to realize more value compared to the other mechanisms, that is Lok Adalat, DRT and SARFA-IC. Okay, but here what survey is arguing, okay, the realization is low, I do agree. Why realization is low? The survey is giving the rate of recovery is contingent on several factors. It is not one factor. What are those factors? Including overall macroeconomic environment. Yes, economic environment is very important. When economic environment is not conducive, no one wants to take that company. So that you don't solve that problem through realization, ultimately you have to go for liquidation. So macroeconomic conditions will play an important role in realizing the value of a company. Apart from that, perceived growth prospects of an entity and sector. Yes, whether this particular company, if I revive, will it grow? Whether the sector itself will grow? Do we have an ample amount of opportunity? Definitely the one who want to take over that company will looking into it. So that is one thing. Next, and the extent of erosion in the intrinsic value of an entity. Yes, you taken a loan 10 years back, you have started a resolution process 7 years back, now you are in the third year and it will get resolved after 5 years, definitely the intrinsic value of the asset reduced. So the intrinsic value of the asset, the prospects for the growth of an entity and the sector, and the macroeconomic environment, these are all will play an important role in realizing the value. You must start the process early. There must be a favorable condition in the environment for both the sector and entity and economy as a whole, then you can realize the good value. But okay, these conditions, some conditions are not in our hand, but at least we have to kickstart the process and we have to streamline the process so that we can recover more. So that is about this IBC. Okay. So this is something about insolvency and bankruptcy code. So in the next video, we will continue the remaining other aspects like insurance, pension, secondary market, mutual fund related things in the second video. Okay. Thank you.
Amrita IAS Academy.